So let's talk about tomorrow, April 15th, a busy day. Google is going to begin selling Google Glass. Huge rollout for that company. Some tech writers say it could be a date people in the future look back on and say, that's when life changed. Also tomorrow, a spectacular lunar eclipse called a blood moon in the Western Hemisphere is going to get a great peek at that. One popular mainstream Texas pastor says that's God trying to signal the end times. But for most of us, April 15th is not about God nor Google glasses. It's about the Internal Revenue Service. That's because, of course, tomorrow is tax day. Now, in this next conversation coming up now, we answer your questions about taxes. If you're a cash worker, we want to hear from you. If you're looking for an extension, we want to hear from you as well. But we also look at the future of taxes and filings and other things like Bitcoin and digital currencies. So if you've got a tax question, whether it's personal or esoteric or about the bigger picture and future of taxes, give us a call. We'll pass it on to our guests. Our number is 702-258-3552. That's 258-3552. Our first guest is Al Wagner. He is the principal of Trinity Tax Consulting here in Nevada, Las Vegas. Al, welcome to KNPR.
Oh, thanks for having me.
Well, I was just mentioning Google Glasses. One of the functions of the glasses is number calculation in real time. And the numbers can actually be plugged into software like TurboTax. Did you ever think something you spent so much time learning and mastering could end up being done through software and a pair of glasses?
There was a time I didn't really think that would happen, but thank God it has because it saves us time.
I suppose. Okay. We should talk about your history just for a moment before we get into our questions about taxes. Tell us how you got started in this field. What were you doing? Where were you living? What got you interested in it?
Well, actually, I was working in gaming. 1983, I got a bill from the IRS, and they wanted about $19,000 in like 10 days. And I had no idea how this worked. So I paid a guy to help me make that go away. And I decided to go to school to learn how the tax system works, and I ended up doing that for a living.
Yeah. Well, looking back on it, that's 30 years afterwards, what are some of the most common mistakes you see other service workers making today?
Service workers like in gaming? Or?
Yeah, maybe. I think in gaming, but just maybe in Southern Nevada, people who come to you as their tax advisor.
What?
I mean, are there common mistakes that they make?
On the tax return?
Yeah.
Yeah, a lot of times if they try to do it themselves, they'll forget depreciation or they may forget a retirement withdrawal that they took, I see that a lot, where they just simply forgot something,
Yeah.
Most of the gaming workers today are on a tip compliance program. And that's right on the W-2, so you can't really get around that.
Yeah, so it's forgetfulness as much as anything else, it sounds like.
Yeah.
Now, our next guest is Rafael Tolino of the IRS, who joins us from his office in San Diego. Rafael, always good to have you. Welcome back.
Hi, Dave. Thank you.
We just heard from Al Wagner that he got into the tax business because he got hit with a huge back taxes bill. Is that a common problem for cash-based workers? Are they generally the ones who get the big back taxes bill?
Well, you could argue that anybody who self-reports their income generally gets a closer look because we want to put our resources where they most efficiently go. So if you're a W-2 or a salaried employee, that or 1099s, those kinds of 1098s, those kinds of matching documents the IRS gets, right? So for those who self-report based on their entire set of facts and circumstances around what they do and how they do it and all that, then sure, we might take a closer look at those who do it that way.
So what are some of the common pitfalls for tip service workers when they're filing?
Well, I don't know if I can give you perspective like Al can because he sees that in terms of his practice, but certainly underreporting is the biggest, in terms of and the tip compliance agreements that the IRS has with the union and the hotels that try to keep everybody in compliance while keeping the IRS out of things. You know what I mean? So, and those are updated every other year in terms of keeping it fair and making sure those who are doing work in those industries pay what they owe based on their taxes.
So how does the IRS figure out, I guess with averages and such, what tip workers should typically be making?
Well, from my understanding how that works, it depends on where you are, your shift, what you do, the amount of receipts that come in, and all that put together, and some negotiations with the IRS and like I said, the unions, the hotel, and management and such. And it's something it's agreed upon for all. So taxes are paid, compliance is kept at the same time. It really keeps the IRS out of having to be involved as much as possible with going back to examine returns to make sure those are all taken care of. Now, these are voluntary agreements, of course, so you don't have to do it. But if you opt into them, as I understand, it's easier for paperwork purposes, so to speak, as opposed to not. Because if you're not in those, and you want to keep good papers, it's always a good idea to keep good papers, but you want to keep good papers to show what goes on your return, just in case you're asked about it.
Well, as you can hear, we've got both Rafael Tolino with the IRS and Al Wagner, the principal of Trinity Tax Consulting here in Las Vegas, to help you get some straight answers on your last-minute finance questions. April 15th is tomorrow, so if you've been procrastinating to this point but you still got a few questions, call us at 702-258-3552. That's 258-3552. You can also tweet us at KNPR News, and you can write us online at our address, knprtalk.org. Al Wagner, it's one day before filing. Obviously, we're going to get some questions about taxes and such. At this point, would you recommend that if anyone has a bunch of questions, he or she should file for an extension?
I'd highly recommend an extension. What you don't want to do is make a rush judgment on what your expenses were or anything. The extension gives you more time to get it together to make sure it's correct when you file it. That's critical.
Rafael Tolino, take us through that extension process. How do people apply for one? How long does it take? And is there any sort of a grace period?
Right, and what Al said is a good point. No, the application of it's easy. Request it one of two ways, either from your software or Form 4868, 4868. It's an easy quarter-page form. It takes you about 3 or 4 minutes to fill out. Your name, information, that kind of thing. Send it in. The key with the extension is it's an extension of time to file, but not necessarily to pay. So if you owe or you think you owe, then tomorrow is your deadline. Otherwise, you may have penalties or interest or both that can accrue on the balance due. And the thing about it is, if you're in a position, and a lot of folks are, where you can't full pay, you do want to file the return, should you have that filing requirement based on your situation, of course, and then pay what you can. Because the penalty for not filing a return at all with a balance due is much greater than filing the return and then not full paying. And then there are options. There's flexibility there that the agency has that we understand folks are in a position if they can't full pay. We understand that. We've got lots of flexibility there. You can set up all kinds of, or you can set up an installment agreement, and it's easy to do online depending on how much you owe. But we realize that in the last 3 or 4 years, a lot of folks are in that position. So that's kind of the key there.
I want us now to hear a little bit of a conversation we had last week with Bill Werner, who teaches hospitality law at UNLV, and explained to us how taxes on Well, it explained that taxes on tips have changed, and we'll try to get to that clip a little bit later on. But Rafael Tolino, the IRS has changed rules on mandatory gratuities.
That came along this year, and that basically is helping to ensure proper tax treatment of auto gratuities. And we aren't saying that these are something that shouldn't happen. We're just clarifying for taxes and the treatment of them based on contacts we've had with external stakeholders through the years in terms of ensuring the fair treatment of such. And basically, a tip versus a service charge for taxes is basically, the clarification is the service charge itself, the auto grat, becomes wages, essentially, if it's distributed to the employee and therefore is subject to FICA taxes. So what happens is you don't get the tip right there, but it goes into your wage, and then, of course, your becomes part of what your Social Security and Medicare. And so we're not really, how do I say this, regulating them. We're reaffirming an old law that says that this is an autograph, and if it's distributed to an employee, then this is how it's going to be treated for tax purposes. And we came along in 2012 and realized a lot of folks said, hey, we need time. So as of January 1st, 2014, this is where we are with auto gratuities as service charges.
Rafael, we're going to go to a caller in just a second with a question about a K-1 form. Can you explain what the K-1 form is to those of us who aren't familiar with it?
I'll give it a quick one, and then I'll throw it over to Al, who probably does a lot more preparation of them. But basically, it's a form from a corporation S-corp partnership that you have, if you have interest in or ownership of, and it goes to you. And then there's a 1065 form generally as well, and that information is based on how you were involved in a corporation or a partnership and how you earn that money, then how it flows through to your 1040 tax form.
All right. Al, anything to add to what Raphael was saying?
That's a pretty good explanation.
I pretty much got it. We've got Bill in the line from Las Vegas. And Bill, you've got a question, as I understand it, about a K-1.
That's correct.
Mm-hmm.
Yes.
Yep, you're on. Go right ahead, sir.
All right. My question is I received a K-1 for a trust. My parents had a trust, and they passed away, obviously. And my sister is executor. And in 2009, the house sold, and we had to take the house back, and then it was resold in 2011, and there was a capital loss. And they just sent me a K-1 with the loss in 2013. And my question is, should that not have been reported in 2011? I'm kind of weary to add that to my tax return.
All right. Al Wagner, what would you advise, Bill?
Well, the K-1 reflects the loss in 2013. Is that what you're saying?
Well, it's showing the form is a 2013 K-1 showing the capital loss.
Right.
But the property sold in 2011, and so shouldn't that loss have been reported in 2011?
Well,
I know that capital losses can be carried forward or backwards, and as far as I don't remember everything, but I remember that you could apply it towards like capital gains that you have. But my question is shouldn't that have been reported back in 2011? I'm just getting a form now in 2013 showing the loss.
If the loss was realized in 2011, yes, it should have. If the loss was realized in 2013, then it's correct.
Well, no, the property sold in 2011.
So it was in 2011. So what can Bill do about that?
You may want to talk to the trustee and have a second look at that to make sure it's correct. Do you have the name of the CPA that prepared the trust?
I don't. My sister is the executor, and she has a CPA in California that has been preparing the tax returns for the trust since my parents have passed away. But I did some taxes back years ago. We're talking 95, 96, so I knew a little bit.
Right.
And I knew enough I looked at it, and she sent me a letter with this form 2 days ago, and it says that I can apply this towards my taxes, and it will help me, and that I'll save some money. It was my share as a trustee was like 20%.
All right, Bill. Let's see if Raphael Tolino's got any advice as well. Raphael,
Al. I mean, what Al asked is kind of what I would suggest. I guess my advice, Bill, is if you have access to a computer, I would suggest you search IRS publication 559. 559 is the survivor, executor, administrator publication that tells more and explains more about the rules when you're talking about what you're talking about. And considering the complexities of the question, I certainly wouldn't offer too much more than that, other than I hope and your CPA, the person you're dealing with, and yourself gets through it correctly, because there's some nuances there you want to make sure you get right.
All right, Bill, thank you very much for your call. 702-258-3552, 258-3552. We've got our man with the IRS, Raphael Tolino, joining us on the line from San Diego. Also with us is Al Wagner, who is the principal of Trinity Tax Solutions here in Las Vegas. And if you've got some last-minute tax questions, don't procrastinate any longer. Ring us up at 702-258-3552. That's 258-3552. Or write us online at knprtalk.org. Al Wagner, I want to ask you a little bit about the future. We started this segment, I was just alluding to the arrival of Google Glasses officially tomorrow and the role of high tech in taxes. There are also digital currencies like Bitcoin. Are a lot of your clients asking about incorporating digital holdings into their tax filings, or is it the kind of thing that's interesting to talk about but doesn't really show up in real life?
Well, ironically, I haven't run across it yet. I've got like 600 clients. But I can see that that's coming, and it kind of makes sense because it would probably be easier to use the Bitcoin as opposed to currency, because if you're buying stuff overseas, you beat the exchange rate, but it's not really regulated by any government, so that's kind of risky, I would say.
Yeah, Rafael Tolino, Bitcoin has got to be an interesting thing for the IRS to try to make sense of, get hands on. I mean, what's the IRS doing in terms of its approach to Bitcoin and how you deal with it as income? I suppose profit loss, what have you.
Well, recently we offered some guidance through a news release and a whole bunch of questions and answers and such related to virtual currencies, and that was within the last 3 weeks or so, let's say the 14th. So I'm thinking somewhere around the end of March is when we came out with this information, and there's a whole bunch of information there. There's a lot of Q&As. As I recall it, federal tax purposes, virtual currency is going to be treated as property, and so the tax principles that go along apply for transactions using virtual currency. And then there's some capital gains issues in terms of the amount of the basis of the currency at the time, and then the transfer into dollars and that kind of thing. So, but there, like Al mentioned, I suppose we're doing what we can to. He's saying he hasn't seen it, but we suppose we will, and so the IRS issued this guidance going forward, because we'd imagine we're going to see that going forward. But that information is on irs.gov, and there's a bunch of Q&As there. I think there's 16 or 17 of them that really answer the questions that folks want to know about it.
Well, in short, Rafael, when it comes to filings, what are the rules about Bitcoin and digital currencies? Do they have to be claimed? As you said, if they're treated
well, that's what I'm saying. The guidance was just issued there, and so you would take a look at that and follow along there. But certainly the virtual currency, the key, as I remember, as I talk to you here without going back to that news, was being treated as property, and so the transactions apply for it related to property and not being considered currency, if I remember exactly how it was offered. And so I definitely, being that it's new and a lot of folks are interested in it, I imagine, based on what I've seen and read in the last several weeks and months, that's where I would lead you to the IRS website to read those Q&As.
And I would assume from what you're saying that the IRS is not going to accept tax payment in Bitcoin.
Generally speaking, we accept it electronically or a paper check. That's the state of the old-fashioned kind of thing for the time being, I suppose.
I suppose. Does the IRS have a handle on digital currencies?
What does that mean?
Well, I guess does do you feel does the IRS feel that it's kind of got a handle on the nature of Bitcoin, or is this something that's still just kind of unfolding?
Well, like I said, that's the guidance was just issued recently. So as we go forward, we certainly want to make sure folks understand how to treat it and offer that for taxes. But going forward, I imagine we'll continue to do what we can to make it clear for folks who are in the Bitcoin or virtual currency business, either businesses accepting it or those who invest in it or use it. So, like I say, there's that information is on irs.gov clearly there. Those Q&As are pretty good. They're easy to read, and they're going to offer a lot more clarity than I'm going to be able to in live radio here.
So Al Wagner, you haven't, as you said, you haven't had anybody come to you with a bunch of Bitcoin information to file yet. What kind of advice would you offer?
Well, it's kind of an odd thing. I mean, I just read the ruling probably 2 weeks ago, and it's my understanding that, let's say you bought a Bitcoin for $75, just to make it easy. And so based on that ruling, if the person bought a piece of property for $100, now they only paid $75 for the Bitcoin, so now they have a $25 gain. So now they have to figure out, is it long-term, is it short-term, or if it's not a capital gain, was it ordinary property? So now they have to figure this out, which complicates the whole thing, in my opinion.
I thought it was going to just simplify everything.
No, it's gotten more complicated. But, I mean, because, for example, you got people out there mining these Bitcoins, and which basically says, okay, your computer or your series of computers are solving these mathematical formulas or these problems, and the more problems you solve, then eventually you get a Bitcoin or 20 or whatever the rule is. Okay, so in that case, it's treated as ordinary income when you get the coin. So let's say you finally mine a coin, and the current rate is, again, let's go with $75 to make it easy. So you mined this coin finally, and now you have $75 of income, even though it's kind of virtual, right?
Right.
and then when you buy something, it's either a gain or a loss. So to keep track of that, Should make some software developer pretty happy.
One would imagine, well, speaking of software, Rafael Tolino, we're wondering with the rise of TurboTax and other software and apps, why can't the IRS develop something similar and maybe offer it for free as a service?
You mean electronic? You mean filing the software itself?
Yeah, something like
Is
that.
the government doing it? Well, the government, leaves that to private industry, and so the partnership we have with the private industry is what we have now. If that's going to change, I suppose we'll administer it accordingly. But as it is now, we rely on private software to help us in terms of e-filing, and about 90% of all returns are e-filed as of just about a week or so ago. So it really is the way people are taking care of their taxes now.
And it's more accurate.
And it's more accurate.
Yeah.
So, Al Wagner, I want you to look into the future for us, and based on what you've seen, starting as a tipped employee yourself and now heading Trinity Tax Consultants, do you see the worker paid in cash as an endangered species? Is something that's eventually going to disappear from the economy?
Yeah, I do. Anytime soon, probably not. But 10, 20 years down the road, yeah, probably less and less. Mm-hmm. And, the economy itself is going more towards electronic transactions anyway.
Is that the key factor?
Yeah, I think so. We're using less and less cash.
Yeah.
So,
Rafael Tolino, the IRS, what do you see as the future for your agency? What are the changes that you guys are talking about in the office that people might not know about?
Well, we'll roll with it. And, technology has brought us, for example, e-file rolled out in 1991. And now just about every return is e-file. Direct deposit is chosen for your refund. So as technology brings us forward, we'll be there with it. And, mentioning the guidance for virtual currency that we have out there, and we're understand that that's part of things. We'll definitely continue to do what we can, and whatever the legislation that's passed, we will administer accordingly. So do what we can and use technology as best we can to be there where the taxpayer is, and social media, for example, to get information, going into e-filing and all the things that go along with technology. Taxes are going to be part of it as well.
Rafael Tolino is the field representative for